the US or even China are in the clear just yet. In the new uncertain environment, investor priorities are changing to reflect a desire for income and capital preservation. With that in mind, BT Investment Management is launching a series of investment products targeting certainty of income. Joining us for more details is the CEO of BT Investment Management, Emilio Gonzalez. Emilio, talk us through these new investment products. There seems to be lots of low-risk options out there for people, so what does this product offer that's different?
Yes, there's a number of points of differentiation here, and we were keen to come to the market with a product that, one, offers a level of income that's attractive. We're now in an environment where term deposit rates and interest rate products and interest rate cuts are happening, and whilst that's great news for borrowers, not so great news for savers. And people are looking, well, how am I going to enjoy a higher level of income with interest rates declining? And really they only have two choices. One is to either reduce the standard of living or slightly increase their risk appetite for a higher level of income. Importantly, what we've tried to come to the market with is something that investors have daily access to their funds and also know in advance what their income flow will be. A lot of products in the market in terms of the income space offer an income solution, but to many investors, they don't know that outcome in terms of cash flows until after a sort of investment period. What we've been able to do is advise investors in advance what the income flow and their payments will be, and that's great news because it means they can use that income to be able to manage their cash flow and meet their bills and electricity and water bills, etc.
Okay, so what kind of yields are we talking here, I guess, is what everyone wants to know.
Well, we're offering two products, and that depends on the risk appetite of the different clients. So we have one product that will offer a income considering in franking credits as well of 8.5%, and another product that will offer an income target of 10% including income and franking credits. They both have different risk profiles. The one offering 8.5% is of a lower risk, the one with 10% is of a higher risk, and that's important as well. But these products are designed to make sure that the risk is managed, but the offset with the higher income outcome to investors.
Okay, so how are you building these products? What kind of components are you using?
Well, we're taking advantage of the current attractive yield in the equity market that the companies are paying through their dividends, and also the franking credits that's quite valuable to particularly investors in the retiree market. And so that's coming through in our income product, but of course the equity volatility in the market is something they don't want. So we take out a substantial portion of that risk out, but often the attractiveness of the income yield. And that means we can leverage of our expertise in the Australian equities team, but also our expertise in managing risk.
Okay, let's talk about the drivers for, I guess, demand for these kind of products. We mentioned in the introduction the volatility we're seeing at the moment, but I guess another driver will be interest rates coming down at the moment and people wondering what do they do with their cash when their term deposit comes up.
Well, we've seen a boom in term deposits, and I think if you look at the stats, term deposits in around about the middle of 2004 was about 200 billion. That number has ballooned to over 700 billion, and you can understand why. There's been a period of capital instability, there's been a period of low growth, but at the same time people have retreated to the safety of term deposits, but also the attractive income which they've enjoyed roughly around about 6% until more recently. So that's created that dilemma of a reduction in income, which means that organisations like ourselves and investment management have to sort of come to the drawing board and think of new products that we can bring to the market to make sure that that income continues to be attractive, and which means it's important for people's standard of living.
We've also seen hybrids grow in popularity hugely over the past 6 months or so. Investors in Australia really growing acquainted with that space. How do you think the kind of investments or the new products you're offering compare to, say, that space?
Well, they are quite different. I think we have a number of advantages in terms of hybrids. Hybrids tend to pay an income on a semi-annual basis. Our products have been constructed to pay income on a monthly basis because bills come through on a more regular basis. Also, our underlying assets are very liquid. That means we can offer daily liquidity and quite liquid in terms of people coming in and out asking for their investments. So that's an attractive. And also our underlying investments isn't exposed to, say, one individual company's credit structure or balance sheet structure such as a hybrid is. We have up to 30, 40 different names within that portfolio. So you've got good diversification in terms of credit names.
Emilio, just finally, have you launched yet, or are you still yet to launch?
Now we have the version of which offers an income return up to 8.5% is already available for investment. and the version that offers a income return including franking credits of 10% is open for investment on the 1st of November.
Okay, fantastic. Emilio Gonzalez, thanks so much for joining us. We really appreciate it.
Thank you.
Well, the 10 Network has revealed its fresh lineup for 2030.